Well, dry shifted another reverse split.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, traders and investors. Welcome to Thursday's May 11th edition of Benzinga's Pre-Market Prep. I'm your co-host Joel Elconin here with a special guest host, Kenny Hit the Bid Glick. On today's show, we have a special guest as well. That's Chris Versace at Tematica Research. He'll be coming on at 8:15. In the news, we can talk a little NVIDIA as it regains its Momo. Triple D comes alive. 13F season right around the corner. Perhaps a merger here with Calpine. We can talk about that. Oil comes to the rescue yesterday. Nice rally in the oil market. We also can talk about some earnings. S&P's down 575, bearing down on a triple bottom here, folks. Look out at 87.5. If we take that out, we have some downside until the middle. 2370 handle. You have gold up 440 at 1223.30, and silver up nearly 13 cents here at 1633 and a half. I want to bring in here the Abraham of assets, the Baruch of bread, none other than Kenny Hit the Bid Hit the Bid.com. Kenny Glick, how you doing?
What's up? What's up? Pre-market prep people. Good to see you in the morning here.
All right.
It's early for me, but it's great to be here. What's going on, buddy?
You got the kids off to school. You packed their lunch. You ready to sit down and talk the markets?
I am. How'd you know exactly what I do in the morning?
All right, so let's start off with some earnings here, and let's start with your favorite stock, Snap here. Oh my gosh, you think they're regretting going public here? First quarter, first report, they're looking for a loss of 14 cents. They come in at a staggering $2.31 loss. Sales are okay, but you're looking at a prior period. DAU's down, or they grew from 122 to million. I don't know what all this stuff means here. I got the chart up here, Kenny. Tell us any thoughts here on Snap.
Well, I'll tell you something. I will admit that I'm a little bit surprised. Using my conspiracy theory notions about Wall Street, I thought they would lie, cheat, and steal to blow out whatever number anybody was expecting, because this is their first time reporting, and they couldn't even get that right. So not a fan, not really looking forward to be buying this. It's kind of been an avoid for me, but if you guys are out there looking for a reason to buy, why not take a look at last night's reaction low as a possible place to pick some up? Because I found that if a stock breaks down below, that knee-jerk reaction, I think it was around 17 bucks. It usually is a really bad sign. Obviously, it's a bad sign to see the stock down at 18 bucks, but if it breaks that 17 level, you're looking at a 15, maybe 12.50 stock.
And I don't know where the street priced this out. I know it was lower than this. I can maybe ask Nick or Ty over here. So it's getting near to that level. But, man, you must be listening to the show because we talk about the pre-market lows and how they could be a reaction. I mean, look at it from the other side, too, here, Kenny. What if you short this thing? You hate this thing, right? And all of a sudden you get a windfall. You see it down here at 17 bucks. You could see the way the 15-minute chart here, it's kind of the support is moving up. So I think if I have to agree with you on this one, Kenny, I think you find buyers if we do go back down ahead of that pre-market level, and you get in anywhere under 17 and a half. It comes at, you'll see some buyers come in. I see it priced at 17 from our Wall Street analysts. So there you go. Good job by Wall Street on that one. And Kenny, we got to get this one out of the way. And I guess Did dry ships report again and do another reverse split here? I see it up at $7. I thought I had them reporting. Let me go to my trusty Benzinga Pro, see what I can find out about dry ships here. Wow, Kenny, bad report. They missed. They were looking for a loss of 69 cents. They lost $7,708
Per share.
per share. Oh, that's
Hey,
terrible.
I woke up this morning. I saw dry ships trading at 625, and I went home with like 10,000 shares at 90 cents. I thought I had made a fortune here. Oh, it's just another reverse split.
Oh,
Wah wah.
oh my gosh. And now we could just pound this thing back down to zero again. I mean, we keep asking this on the show, and I don't know if we've ever done any research here. How can they have that many reverse splits in a row? I mean, it's just unbelievable. And the company had sales of 17 million. I mean, this thing is not much bigger than Benzinga here. So, all right, not much we could say about that one. A stock that's been hot lately, and rumors of acquisition is taking Whole Foods. Man, from under $28 area, we just hit 37.74 in
Wow.
pre-market trading. Inline report Q2 adjusted EPS 37 cents. Inline sales here at 3.73 billion. They appointed a new CFO, so I don't know if that's going the merger and acquisition route. But Kenny, give us your thoughts here on Whole Foods and just how you kind of approach stocks when they're potentially in play.
Well, oh, sorry about that feedback there. I do like the chart. This is the kind of chart that I've been trying to find in this market because, we've had a market that's gone up so far, so fast, and really dictated by about 20 stocks. So I'm trying to find stocks that look like this. As far as a takeover, I don't like to buy into news. But I do like this breakout of this really low consolidation between 27 and $34. And one thing about Whole Foods that I've always noticed, it's kind of like a good indication on the economy itself because, hey, if you're willing to be ripped off by overpriced food that probably isn't organic, I guess the economy's doing well.
Your echo our sentiments exactly. I mean, you go in there and try and buy an apple for $1.50, and
Yeah.
everything is super expensive there. I mean, big run up here. I don't know if Amazon's coming in to take this out. I'll just alert our listeners that the former high of the move was 37.33. They really didn't blow things away. You got a pre-market high of 37.74. So, call that minor resistance here, trading at 37 and a quarter. So they did blow it away. We'll see if we got any profit takers coming in to the issue. In our chat, Down War Dog, like us to make some comments here on VRNT, and that's a stock that I'm not too familiar with, just kind of bunching up here. I'll bring up the daily chart, and Kenny, I'll see if you got any comments on this one. I'll check to see if there's any news.
VRNT.
Verint Systems Incorporated. To me, it's bunching up at $40 here. High at 40 yesterday. High back a few sessions ago at end of April at 40. Man, and a triple top just above that. So, I mean, it looks like it's itchy. It looks like it's raring to go here. So, to me, kind of like out a breakout above 40, but I'm not waiting for this thing to go back down to $39. I think I'd keep a pretty tight leash on it. Any comments on Verint Systems?
Just a quick glance. Looks like it's a thin, low volume stock. If I'm correct, I've never checked it out. But for me, I like that 40 idea, but I like it even better if it breaks over that 40 and a half. For
Gotcha.
me,
Yep.
40
Yep.
and a half gets going again. You might get that move back to that high water mark where it just broke down from like 44, 45. But yeah, I mean, again, I like this. I like stocks that have gotten beat up and are trying to make comebacks. This one's looks like $30 was the bottom there. So yeah, 40 and a half doesn't look too bad. But again, I don't know much about it. I give it a glance for a couple of days. Doesn't look like it trades too actively, if I'm right.
Do you have a criteria for volume on issues that you trade? I mean, do you like to go a little bigger cap, smaller cap? I mean, I know it's fun to be in those thin ones when you're right, but when you're wrong, it's kind of tough. Do you have a criteria for volume to trade stocks on?
Yeah, generally, I'm not trading stocks that don't have, at the end of the day, you're not 500 to a million shares at least. I need volume to make my stocks work. I don't like taking, for me, the low volume stocks are a little bit more risky. Obviously, if you're getting them right on the chart, you can make a lot more money very quickly because they're easily squeezed. And obviously, when they start to get crushed, they get crushed a lot faster. Um, like these biotechs that have been running all year, it seems every 2 days there's another biotech that we've never heard of up 200, 300%. And it just seems like most of them roll over and die. So I'm not a fan of holding those, but they're fun for those 2 or 3 days when they're in play. But as
Correct.
far as my investments and what I mostly trade, really I'm talking about, high volume stocks. And somebody's mentioned DDD. It's one of
Correct.
my favorite stocks over the last couple of days or the last couple of weeks lately.
All right, let's go right. We'll go into that in 1 second, but I first want to bring up the earnings report from a peer in the industry, and that's X1 Corporation. They reported not a great report here on the surface after the close, a wider than expected loss of 15 cents. They made a whopping 10.9 million. That was quite a bit, 800,000 over estimate. So that was a good report. I was thinking about this one taking this long in the report. Hit 1250, and let's look on the dailies here. So I'll let you. Ooh, 1250. We haven't been in this area for quite a while. Little double top there. I see two more tops at 1275. But Kenny, I'll let you comment that on a second. And then Triple D, man, this thing did not have a great report. They actually hit it. 80 cents on the report from 16.80 down to 16 bucks. Then this just turned around on the dime, and I talked to Triple D yesterday, our own Triple D, Dennis Dick, who just had a baby 2 days ago, and he said, listen to this, this dog, he threw it in his portfolio a couple weeks ago in the middle 14 handle. He was just looking at it ahead of earnings. He had no idea. This is 1, 2, 3, 4 up days in a row. Man, oh man, is this just something where you just want to move the stop up, or do you want to try and pick a point to get out? We're trading at levels. Holy macro. This could be a major breakout over 20. Give us your technical comments on Triple D first, and then XONE.
What was the other one? I wanted to quickly put that one up. The XONE.
Yes, sir.
Okay. Well, with Triple D, again, I mean, you're finding some really great stocks on the charts. I like these stocks that are making comebacks, and if there's been a comeback over the last 5 or 6 days, it's been Triple D. This thing just broke from a 2-year high to a 3-year high, and that's the kind of move I like to make because people might have forgot this used to be a high flyer that got really destroyed, but the technology's still there. 3D printing's not going away. It's something that we're looking forward to using in the future. Prosthetic limbs, to name one really big industry that this thing is going to be a part of. But the chart, my God, this went, you know how I love myself some VWAP. On that earnings report, first you got this monster spike down, and then it pretty much engulfed that entire candle, then broke out. So you had about 5 or 6 reasons to buy this stock. You got an earnings reversal, you got a shake off of what wasn't too great of a report, and then you got the short squeeze, and then you got a 2-year, 3-year breakout. I love this stock, and I'm in it right now. I've been in it from 1685 break, and I was really happy to see it break the 1975. So now that it broke 1975, I got a couple of targets, about 21 and then 24, and then really I see this thing possibly moving to 2750. But with anything, looking for a little bit of a pullback before I reload. I sold some yesterday. But, looking for a pullback. If I could get a pullback to around 1850, I'm going to load up again using that 1685 again as a stop. And I think this might be something that you can hang on to because, again, we're running out of ideas in this market.
Great point.
It can't be always Amazon, Netflix, and Apple and the QQQ. So we're scrounging for ideas. And this has been our high flyer once before. Who's to say you can't tack on another 10 points right from here really easily, especially after I watched, and I know Restoration Hardware, I mentioned it on your show once before, the same coiled spring. When these stocks start to come back, you never know what they're going to do. And I can't believe I'm looking at a Restoration Hardware RH at $60 a share when we were just talking about this on the show last time at 28 and 31 for a possible breakout. So I look at Restoration Hardware, and that really just opens my eyes to what these pent-up, beaten-down stocks could do.
All right, there's a chart of RH. I remember losing money on 30 calls on this going into one report. I'll have to go check my statements on that one. Obviously, not far enough out. But SSYS is also in the sector, folks, so keep an eye on that. But we have just flown through the first 15 minutes here, and we got a guest to bring on, and that's Chris Versace. And he's from Tematica Research, and he's going to come on and talk about Costco and the markets and M&A. So we'll be right back with Chris. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, with a special guest host, Kenny Glick, and we have Chris Versace on the line of Tematica Research. Chris, how you doing on this Thursday morning?
I am doing fine, even though it is coming down like cats and dogs outside.
All right, not bad here in the Motor City, but the stock of the day, the IPO of the of this year, the former darling of Wall Street, Snapchat. Snap, go splat.
Hang it, Joel, hang on. I have to interrupt. What do you mean the former darling? It was never a darling.
Well, if you shorted it off the IPO, I might have tried to do here at 24, 25, 26, 27, 27 and a half, 28, 28 and a half, and never tried it at 29. But, it had a nice run. It gave it back. Really didn't get a lot of love from Wall Street here. Just a horrible report. I mean, you're thinking, why did they go public anyways? But I don't use it. I don't know if you do. I don't know if Kenny does. But just give us just your quick analysis of Snap.
Yeah, so I mean, just so you get my perspective on this, right around the IPO time, I wrote a piece up on Forbes that said, Snap is, in my view, very much the next GoPro, right? Meaning that it's a feature what they do. It is not a standalone product. And what have we seen? We've seen, their competitors, particularly Facebook, really double down with a lot of the offerings that they have, building it into Instagram. I just think it's going to be a very, very tough time for them. The competitive landscape with Facebook is just massive. There are a number of different reasons that people go to Facebook, and they have a number of different platforms, all of which they're monetizing. And I just think it's going to be very, very difficult for Snapchat. And coming out of the first quarter from being public, I mean, look, if you're a newly public company, you should have a very good window on the first 6 months of what your business is going to do. So to come out of the gate and bungle it like this with, weaker than expected subscription growth, greater losses, I mean, it is not good.
And I read that the day of its IPO was TD Ameritrade reported that it was his heaviest day of trading on from mobile trading. So you had all these millennials out here. Oh, Snapchat, I use that a lot. I'm going to buy it, and they are.
Well, that's the old Peter Lynch, buy what you know, right? But you can't stop there. You've got to understand the competitive landscape. And look, there's no argument that we're seeing advertising increasingly move towards digital platforms, right? If we look at Google's results, we look at Facebook's results, and a couple others out there, it's happening. But the question is, what does Snapchat have that's very different that will attract advertisers? And even Twitter has had a very rough time of it, so much so that they have really pivoted their business towards video.
Yeah, it's. You're competing with Facebook here that can replicate what they do. I don't know. I've stayed away from it. I'm staying away from it. Interesting. The IPO price was around $17, and that's your pre-market low. So just gonna move on here to a real stock here, Costco, and they put out a $7 dividend, and it just kind of perplexes me when a stock's at 165, 166. They put out a $7 dividend, so I'm like, okay, maybe 173 is a good number, right? Because you had $7, you're going to get the dividend. They take this thing to 183.18. I mean, market related, I don't know. They really want to own the dividend. I think it goes X today. I'm not sure. But, man, I know every time I go there, I drop like $300, $400, $500. And, good business model. I don't think Amazon can really ship that stuff to you, the big steaks and everything, and keep it fresh. Give us your outlook here for Costco.
Yeah, so I have been a big fan of Costco for some time, and I too am a heavy user. Good luck getting in there and not dropping anything under $100, right? But there's a couple pieces to Costco. One, I really like their push into fresh foods. It keeps people coming back on a more frequent basis. They're also pushing heavy into natural and organic products. That's where consumers are spending. So you're getting those two tailwinds that are really positive for the business. But Joel, here's the real secret to Costco, right? We can think we go in and we spend a lot of money, but the real area that they make money on is on the membership fees. And as they continue to open more locations, they get more members, they get more high margin membership fee revenue, and that really drives their cash flow. So when I see them upsizing their dividend from 45 to 50 cents, I feel really comfortable with that because, they've telegraphed the number of openings they're going to have, and you can back into what the incremental cash flow is going to be. That's why, honestly, like the $7 dividend, I think it's great. I think it's going to attract a lot of people, probably popping the stock a little bit. We'll see it, obviously trade off after it's all paid out. But I think this is one to own, and I think you are right that they have a very nice competitive model against Amazon. Having said that, there is a private company out there called Boxed, Boxed. They are kind of like the baby between Amazon and Costco, and they do ship in bulk. So I think that's a company to keep on your radar screen, especially if that one goes public.
Very interesting. And my favorite thing about Costco is I can go out there and shop right before lunch, and I can get a free meal. You go buy all the
free samples, you mean?
Yeah. I mean, sometimes the ladies are like, okay, you've been here 3 times, all right? No more little hot dogs for you or whatever. But that's a good thing. You can kind of graze there along with you getting a meal. Let's stick here in the retail sector. Very volatile sector. April, we have a earnings season here to start, and I guess Macy's, we won't talk about that yet. That's getting massacred. But let's just talk about, in general, April retail sales and what you're looking for.
Well, the number's coming out tomorrow, right? So it'll be kind of interesting to see what we get. I think that it's going to buck the trend, but for the wrong reason. So I'm not looking for retail sales on their own to get better. If anything, we've seen credit card debt is, now over $1 trillion, student loan, $1.3 to $1.4 billion, rising auto loan delinquencies. We're hearing more about bank card delinquencies. Synchrony and Capital One just ratchet up their bad debt percentages when they reported in the first quarter, right? So that's going in the wrong direction. And if we look at personal spending data, savings rate data, it's not really painting a robust picture for April retail sales. Having said that, we all know that Easter came much later this year in April than March last year. So that could give us a little bit of a bump, maybe a head fake. I think the underlying data, though, is going to tell us, yeah, consumers are not really spending as much as we thought.
All right, so we'll get those numbers. A company that had numbers yesterday, the House of Mouse, Disney, just had this slow incremental run, just chugging along since the beginning of the year. Goes from the 108 level, hits 116, and then lo and behold, 4 trading days ahead of the report, it loses $4. Not a great report here. I did hear that they paid. They just have a new NBA contract. I heard that they paid triple the amount of what the previous for the previous contract, and then the NBA Finals are definitely a thud. They got other things going. Give us your short and long-term outlook here for the House of Mouse Disney.
Yeah, so I mean, coming into this year, it was widely telegraphed that 2017 would be a transition year for Disney. And I think especially for the first half of the year, and we're really seeing that play out. You know, if you look at the movie slate, yeah, they had, the carryover from, Rogue One and Beauty and the Beast, but only now are we starting to really hit the summer movie season for them. Guardians of the Galaxy 2, we've got Cars 2 coming up, we've got Pirates of the Caribbean, they have an equity interest in the new Spider-Man movie, and then other movies in the back half of the year. We're also starting to see them really invest in Star Wars lands, both Disney World and Disneyland. So again, very much a transition year. For me, it gets a lot more exciting as we get towards the back end of the year. We've got, the Thor movie, we've got the next Star Wars movie, and we'll start to see the ramp down in capital spending. Remember, too, though, Joel, Disney is a cash machine, and they upsized their buyback program by another $2 billion. So I do think the stock will have some support. I like buying it closer, somewhere between 100 and 105, to be honest.
All right, so waiting for a little bit of pullback here. All right, before we let you go, I don't know if I ever asked you before. I mean, not only you an eloquent speaker and great analysis of the market, but you're a co-author of a book. And Kenny,
Yeah.
you may like the name of this book, Cocktail Investing, and you're also co-host of the Cocktail Investing podcast. Tell us a little bit about your book, Cocktail Investing.
Well, the book was something I wrote with my podcast co-host, Lenore Hawkins, and I think she's been on the program. And look, we stepped back and we were thinking that, particularly in today's, frenetic world, we talked about Snapchat, Facebook, you could talk about Twitter, cable news cycle, and all this other stuff. There's so much news, or would-be information that is kind of hitting investors. And, you can get kind of lost, or as we said, when I was an institutional research analyst, if you're not careful, you can get into analysis paralysis. You get so much data, you don't know what the hell to do. So what we really try to do, both on the podcast and in the book, is really help people understand what you need to look at company by company, what is going to drive the earnings. And, in the book, we've got, the 12 questions you have to answer in order to buy a stock. It's really soup to nuts. On it. And we continue that in the podcast where every week we're looking at what is going on, and we're taping later today. So the questions are, what's going on with the Fed? What's going on with oil? What's going on with inflation? What is the distraction in D.C.? And what in God's name did Wilbur Ross's comments yesterday mean for the market, the Fed, and all that stuff? So that's kind of what we do. But it's fresh stuff every week on the podcast.
All right, we've been on the line with Chris Versace of Tematica Research. Author, speaker, podcaster, great to have you on. We'll talk to you again soon.
Thanks, fellas. Have a good day.
All right.
Thanks, Chris.
S&P futures down 6.5 at 88.75. Just 2 ticks off the low of 88.25. And folks, don't look now, but we're bearing down on could be a triple bottom unless we take it out Monday, Tuesday, Wednesday's low 87.5. That's the big number. All right, let's get to one stock here. I just want to get out of the way. Someone asked about Mankind, and I'm not sure if we have some news on it here. Down at $1.29, hit $1.88 yesterday. I mean, this thing has just been in trouble forever. Do we have any news on it today? Let's see here. Mankind. What if I can find out here? They reported a wider than expected loss, 17 cents versus 9, and sales, Kenny, only a miss of like 14.5 million. The estimate was at 17.5. They came in at 3 million. I mean, why is this stock not at zero already, Kenny?
The mankind's the dry ships of the biotech sector, or let's call it the Amrin of the Amrins. Mankind, I've heard about this stock going on probably about 10 years. This is going to change my life. Mankind. Just full disclosure, I have no idea what they do and I have no opinion on the stock, but I've been watching it and I've been seeing people continuously tout it as the next coming of, I don't know, give me a biotech stock that actually worked. Regeneron, I don't know. But it's just a loser stock. And the more people that continue to say they're just trying to shake the weak hands out, or the market makers are holding it back, you've heard every excuse why the stock's not, a $200 stock. It's the dry ships of biotech, in my opinion.
All right.
Sorry.
No. I was here. I was just talking to my analyst here, trying to get a little update. Street leaning the wrong way into this one. Glucose inhaler, I did know that. They haven't had great trials. I'm not sure if she's new to the chat here, but we got Diana Dawn asking about GSIT. Unusually high volume yesterday. I'll bring up the chart. Let me see if I see any news on it. Now, when you see a big move like that, big volume to the upside, Kenny, I'm prone to go with the big volume move. Not familiar with the stock. Let me check out the news on it. Hasn't had earnings for a while, but boy, this 850 level, let's see if it's doing anything in the pre-market before I stick my foot in my mouth. No, closed right near the high. Kenny, I know you mentioned the VWAP before. Probably the VWAP's way down, somewhere on this one, maybe near the $8 level. What do you like or not like about the move in GSI Technology Incorporated?
Well, stock looks like it's up, 200-300%. Huge move yesterday. Looked like it was about to roll over and,
Yeah.
maybe head back to 7, but yeah, extraordinary day yesterday. If I was long this thing, I would just be looking at that whole number. Breaks back under 8, you want to be a seller. Usually these one-day wonders are, you give back half that move. And then if it consolidates and breaks that reaction high, what is that, 850, I guess, then maybe you got something going on. You'll make a move back to that 970 area. But for me, you got to stop on this right at the whole number, maybe 805, $8 for today. Breaks that, you're looking, right back down to 750. And again, I'm just talking technicals. I know nothing of this company, but usually you'll see a lot of this big move just give back the next day. So don't be afraid to sell it if it breaks that 805 area.
And are you a fan of double bottoms, double tops, triple bottoms at all, Kenny? Because I see.
Yeah, I'm a fan of all those things. I love me some double tops. Actually, I like there was that AMD stock that I've have come to know and love, and people are really just wondering what to do with that thing at this point. But there was a triple top right around that 1475 area, and ironically, it was when it was added to the S&P 500, and everybody thought it was a no-brainer that this thing was about to blast off to 17 and a half. Not only do I like that double top, triple top area, but when you get the stock where it starts the day off in the green and then fails to break that double top area and closes red, that's what is also known as the blow-off top. And generally, that's the real death knell of the move. And that's when you start looking to not only dump your stock, but possibly go short. So why do you ask?
Why do I ask? Because you're the Abraham of assets. I want to get your opinion on different charting formations. What we also got a stock in here, MDXG, and this thing has just been on a tear. And I don't know what to tell you if you own this thing. I mean, it's been absolutely straight up. This is a new all-time high for the issue. I'm looking on the monthly chart, and holy moly, I can't believe this thing has had this many. Let's see, 4 up months in a row. I think in this kind of issue, when a stock just gets breaking away like this, I like to keep an eye on the close. And the close in this situation was also the high print of the day, 1476. So trading down a little bit here, or not much, flat in the pre-market. Maybe I'll just keep an eye on the $14 level instead of trying to pick a top. This is not a huge volume stock either. Traded 129,000 yesterday. Nice looking chart, Kenny. You find can you do any Fibonacci extension targets, or how deep do you go in your repertoire to find resistance in MDXG?
What did you just say? I'm a VWAP. I've been just trading the VWAP and my, I've got my own candlestick pattern recognition.
Okay.
Did you use RS? What did you say? RSI retracement? Because let me bust out my Ichiro cloud covers. No, really. When I look at this stock, MDXG, I see a penny stock run completely wild. I see a thing that was down at 35 cents, trading at $15 now. Oh my Lord! If I was in this stock, I tell you right now, please dump this thing if it breaks back under 13.25. You see that high water mark, that huge spike up around 13.25 and just broke out from there? That would be my stop on the stock. And right now, I mean, wow, I don't know what this is. I don't want to own it. I don't want to even have it on my chart. It frightens me because anytime I see a 35-cent stock trading at $15, I just have to assume something bad eventually is going to happen here. So I'd have a finger on the trigger ready to dump this. And that being said, it could also run to $100 a share because this market is absolutely absurd when it comes to these. I'm assuming low float. Is this a biotech? I don't know. I don't know much about it. But right now, I have a warning sign at $13.25 for all you maniacs that are still long the stock from 40 cents. Congratulations.
Yeah, to me, I see three lows right at the $14 area, so I think I'd even cut bait under there. That's a triple bottom. Yuri S in the chat is asking about your RSI retracement.
I think he must know that I don't subscribe to any other indicators. I think he's just pulling my leg right now. But
okay.
I have stopped using I used to be a Bollinger Band, stochastic, RSI. I was trying my luck with the cloud, and I always keep coming back to VWAP. And one of my heroes that maybe is an undiscovered gem in this industry, my buddy Zach, who programmed VWAP over an extended period of time, and it's really changed the way I look at technical analysis. So it's a fantastic thing, and I'm not embarrassed to say that he is the emperor of VWAP. I am only Darth Vader, but I'm very proud to be Darth Vader.
All right, yeah, it was tongue-in-cheek with the Fibonacci extension there. I don't use them either, but keeping it simple is the method we'd like to try to ingrain in our listeners, investors, traders. Let's move on to a disastrous report here this morning. I guess nobody is shopping at Macy's anymore. And this one, Kenny, you see different pre-market charts, and this one is not showing any signs of life here. Macy's reported an EPS of 24 cents. That was against estimates of 34 cents. So they missed by a dime. Revenue was shy by a couple $100 million. I guess the turnaround in Macy's is not such a turnaround. 25.64 pre-market low. I don't know. You looking for try and do some bottom fishing in this one, or sit on hands?
Wow. I'm a big anti-retail, but I would be, again, looking to buy it when it cracks down, into the 20s, the low 20s. I'm talking like around $20.50, $21 area. It looks like it could have some support there. But I'm the guy that likes to find these stocks when they start to, come out of the destruction, like the DDDs and the CYHs and the Restoration Hardwares and Lumber Liquidators. This one, the disaster we're still in the midst of the disaster. So when the dust settles and they try to figure some stuff out, whether or not they stay in business, for God's sakes, who goes to Macy's exactly, except my mom. But you don't want to be looking to pick a bottom. Again, there's always a trade somewhere, but this is not my kind of stock. I let the disasters just, keep getting destroyed, and then eventually, when they find themselves a bottom, I'll look at them, a few weeks, maybe a month later. But Macy's, I really don't have any interest in this stock at all.
All
At
right,
all.
all right, Kenny. Let's just throw the flip side of this, and Dennis and I like to do this on the show, kind of look at things from a different perspective. And let's say you come in short, a pretty good chunk of this stock here. Let's say you're short 5,000 shares. I'm just throwing out an example there.
Right.
Are you sitting on a bid ahead of that pre-market low at 25.64, maybe at 65? Are you lifting some offers? I mean, do you because what I like to do when I traded larger positions is, put 500 out here, put a 500 out here, put 1,000 out here, see where people are willing to hit the bids, and then I'd be really looking at the double monthly bottom, and I don't think it's going to get there. Going back to September and October of 2011, you had two monthly lows at 24.20, 24.38. So just give us the flip side. Or would you just let it breathe and just say, hey, these guys are going to pound it. I'm holding on for $20. How do you approach when you get something like this going your way?
If I've come in short, I'm really just looking at half number and whole numbers right now.
Correct.
It just was at 25.64 in the pre-market. There I would have been looking for 25.50. Once it didn't get down to 25.50, I'd actually start covering when it broke over that 26. And now I'd be looking at 26.50, and I would have my orders right at 26.50 to start covering some more. If it got there, and if it broke there, I'd probably start covering a little bit more all the way up to 27. But right now, I probably would have covered a little bit at 26 and just letting it breathe till 26.50. And again, if this thing breaks back below 25.64, you're looking for that 25.50 area, and at 25.50 falls, we're going back to those prices you just said. I see what you're saying, around that 24.50 area. So again, that's exactly what I'd be doing. Definitely would be covering right around here with the 26.50 as a stop. And if this thing rolls over, just let it die.
Yeah, one other strategy that we talked about, if you get there's going to be some sell stops. There's going to be some people just puking on the open. Let's say you get a 25.60 open, and then you get a quick dash down to 25.20. A lot of times when you come back up through that opening price, you might get a little pop. You might scare some people out that shorted it in the hole or were looking to cover on weakness. So keep an eye on that. Good strategies, Kenny, on that one. Kind of going, I don't know if we're really going in opposite directions, but definitely on the report. People that are not shopping at Macy's may be going to Kohl's here. Kohl's had a 10-cent beat, 39 cents. Estimates were at 29 cents. Just a little bit shy here by 60 million on the revenues. Spiked down to 38.76. I don't know if that's when the Macy numbers came out or not, but Kohl's just hanging here at the $40 level. Could Kohl's and Macy's go in opposite directions today?
Well, give me the symbol. I haven't actually never looked at a Kohl's stock. What do you got?
Really? KSS?
Yeah. KSS.
Kohl's. Wow. You don't have
Probably
those?
the first time I've ever pulled this stock up in my entire life. Okay.
You know why? Because it's a Midwestern company. It's based in Milwaukee. Herb Kohl.
Yes. Yeah. I heard of it. I just never looked at it. My God, my Lord. This thing, basically, if you bought it at $51, 17 years ago, you're still underwater. So congratulations for wasting 20 years of your life. I guess they pay a dividend. I don't know. What is this stock? $40? Ooh, man. That is one ugly looking chart. No comment.
Okay, I like that. Folks, I'll just look at the multiple highs here. Let's call it 40-40. We're down 74 cents now. Someone was really trying to wiggle out ahead of the report. You had 5 highs in a row from 40. Yeah, so 40. If it gets back up there, maybe lay out some shorts there in Kohl's. Not a good day for the retailers. Another sector that's been hard hit is the pharmaceutical sector. Let's take a look at Teva. That kind of got dragged down by Mylan with all this EpiPen controversy. Generic drugs also. Trump hasn't been a big fan of them, but we got a little pop. The dogs are barking on this one. You got up to 32.47 in pre-market trading. Back down at 31.60. I'm just going to take a look at the closing price here in Teva from yesterday, 31.36, and Spike made a new low of the move. Hands off, or any ideas here on Teva Pharmaceuticals?
Well, you know how I love a stock that's getting their butt kicked. For me, it's forming a nice bottom range. This is something I call the exhaustion situation formation. If it could bounce around these lows between $30 and $32 for another extended period of time, a couple of weeks, I see a breakout that could possibly be a nice trade around 32.25. So I like to wait, let it chop around and confuse and confound people. The longer the confusion and lasts, the breakout will be even better. So you're probably going to need a catalyst. This stock's been around forever, and my God, it used to be a darling back in when I started as a broker in the 90s. So for me, this thing, if it could find itself a bottom, you're looking for a possible breakout around 32.30 if you're if you're feeling like you want to test the waters down here. But I would not let it break back into the underneath 30, because my God, once a stock breaks a big whole number like that, generally you're headed down to $25. And again, I don't know what kind of drug they're into anymore, but not a friendly looking chart.
Not at all. 72.31. That was the all-time high back in July of 2015. The Israeli generic pharmaceutical company. Kenny's mentioning the lows of the move here, 30.22. You got down to 30.25 yesterday. So maybe institutions eyeing the $30 level, but throwing some bids up ahead of it. Maybe a little bit more consolidation. I see the tops above 32, so that could be a level to keep an eye on. Let's preview a few of the earnings. They're going to be out after the close, and we'll start with CyberArk, cybersecurity here. Now, this one has been doing a little bit better than some of the other issues. I know FireEye has gotten off the mat, but for me, technically, I see a pair of highs in CyberArk right at the 55.65 level. You also found some trouble back there in February. Is this one that ever makes it onto your trading screen?
Well, I've got no love for cybersecurity stocks. Again, because I'm a conspiracy theorist. I believe that most of these companies perpetuate their own viruses. They obviously, we've all gotten viruses on our computers. The United States government gets hacked every single day. So obviously these companies are doing nothing to protect us. There's the PanWs, there's the CyberArks, there's the FEYEs. I think the only thing that keeps them in business is every once in a while they come up with a virus. It makes the news. Everybody goes viral, I guess, to use that word there, double little redundancy there. But then they come out and say, hey, we've got something to fix this virus because we built it. And then next thing you know, their stock pops and then it rolls back over. Not a fan of the industry, not a fan of any of these stocks. But I do like FEYE, technically speaking, because whatever got them going causes the short squeeze. And that's when I come in as a trader. And again, not a fan of FEYE, don't believe in the company, don't believe in the industry. But my God, when it broke back over 12.50, you're looking for a move to 15, and look where it is now, $15. And with this market, once a stock gets shorted, once the squeeze begins, no fundamentals matter in the midst of a short squeeze.
Good point there. 15. They hit that a few days ago, and that's also resistance going back until September of last year. So keep an eye on this one. I'm like, me, I can't be long because it's going to go back and fill the gap to 1250. But sometimes they never come back and fill those gaps. Also, after the close, where Kenny buys a lot of his clothes at JW Nordstrom. Man, 50. Let's see. Are they hit? I mean, how can you go into with any confidence going into this earning report? They got smacked on the Macy's here, 48.35, down from the 50.50 level. We saw this happen with a few other stocks. I think. The first one was Hasbro and Mattel. Mattel came out with bad earnings. They hit the Hasbro. Hasbro ended up closing green on the day and ended up having a good report. We've talked about the sympathy plays not working as much. So I'd really like to see how Nordstrom reacts here, if it can shrug off the bad report from Macy's and get back. And I think you might, just from the fact that, people that got short this thing ahead of the report, it's had a nice run up. What do you think? Any comments on JWN?
Well, I think you just summed it up. I would not be getting in, first of all, you never really want to be buying anything ahead of an earnings report unless you are, you have that crystal ball or an in with the CEO or the largest shareholder of the company. But it's an avoid. You want to avoid all of these stocks. And, if you like it, you're hoping for it to get, beat up back down to $42 and, try that trade again. But, I see the low at $35. I'm, again, not a fan. And every time I'm in Nordstrom with my wife, there's really not that many people in that store either. I know, again, that doesn't mean anything. But not a fan of retail. I'll, use that Macy's and, keep Macy's up on your screen to remind you the next time you want to be buying some sort of retail company.
Well, there are people in the aisles that are trying to spray cologne on you that I try and avoid. All right, let's go back to the 3D printing sector, and there's another one here. I believe it's a German company, and they're going to report, I think, after the close, VJet, VJET, Voxel Jet. You can see this one had the nice run up. Was a $70 stock. Hit 261 in March. Does this meet the Kenny Glick criteria of a dog turning into a darling?
Holy moly, what the heck is this? Wow. Yeah, I would have been a big fan at 350. Really would have been a big fan at 350. 350. And now if you're in this stock, I'd be using this 380 area as a stop. But if it can hold the 380, and then if it pulls back to 350 and hangs in there, it doesn't look too bad. This is the kind of chart that I love. And if it gets over 350 and, 4, then generally stocks that can hang in there, you'll see it gravitate to 5, and then it becomes a whole different ball game because a lot of people out there don't care about stocks under $5, let alone 250. But once it gets over 5, then you have a new crop of investors, a new people. There'll be some old school VJet owners that get encouraged by it being over 5, and maybe you could see 750 on this stock. But breaks over 5. Yeah, you got a pretty good shot at 650 on this one. Are these also a 3D printing company?
Yes, it is.
I've never heard of it.
Yep. It's a German company, and they are reporting after the close. Larry in the chat, and I can tell you, he has been pounding the table on this stock for a long time, and he says it's the new king of retail. Five Below, a dollar store called a $5 store. Is this an all-time high for the issue? No, not quite yet. We did have a high back in July of last year at 52.70, and boy, I guess we're kind of keep that as a potential target. Let's look at anything in the pre-market trading. Yeah, 52.63. Any thoughts on Five Below? Do you have those out in New York?
Yeah, all over the place. My daughter loves that place. We got one right next to the art supply store next to us. So we go in there, and whenever she needs some cheap art supplies and stuff to glue on things. We've been in there a bunch of times. That is one monster W chart there when it, wow, went from 52.70 right down to 38, bounced off the 38 area right back to 57. Wow, that's something. Wow, that's incredible. So if this breaks 50, what is that, 52.70?
Yep.
Breaks 52.70, then you should be gone. But I think we're missing the one monster trade that I might have mentioned at the beginning of the show. Speaking of retail, Alibaba, people.
Yeah.
Alibaba. This might not be on your radar, but a lot of people, you just might have missed one of the biggest moves in the market. Now, I've never been a fan of Alibaba, the company, not a big fan of Chinese stocks or communism for that matter. But you know what? This stock looks like it wants to make up for lost time. And now that it finally broke an all-time high, finally, I think this thing has a 30-point move in it. And if it really joins in on the party, you're talking about Alibaba looking at a $200 stock right here. I know that might sound crazy right now, and if their report's no good, next Thursday, then this $120 area might be the biggest double top in the history of their company. But this is one you want to be watching as far as if you want to look at a retail stock, Alibaba is the one. And I own it right now, full disclosure. And, I'm loving how it broke over 120.
Yep.
If you're a little bit nervous to own the stock, plenty of liquid options on the name also.
Do you ever would you sell any calls ahead of the report? If you could get like a 125 call for $6, do you ever dip into that, or maybe try some puts if you have a large position, or you'd stay away from the options markets and just live with the tape?
Are we talking about Alibaba in particular?
Yeah, Alibaba in particular. Would you take?
What I've been doing is I own the October 120s, and what I was doing was selling near-term premium to offset the cost of my long-term play. And what I've done is, I've unwound that position because the stock started breaking out. So, I had the 120s and I was selling the 120s for last week, but then as the stock continued to go up, I didn't want to take profit out of my own pocket, so I covered the near-term ones and just held on to the long-term ones. But going into the report, again, earnings reports are a crapshoot. You don't know what's going to happen and how the stock's going to react. You can have a blowout number, and there might be somebody out there who has, 10 million shares of Alibaba at $70 looking for a reason to sell, and maybe that number comes out and what looked like a great headline, next thing you know, your stock's down 5% anyway because somebody wanted out. So I like trading the stocks after they report.
Yeah.
I will have something on, possibly a straddle, maybe a strangle. That's when you'll buy the 125s and you'll also the 125 calls, and you'll also buy the 115 puts, looking for a huge move. Which I think if they disappoint now that they're all-time highs, the stock's rolling back to 109. But if they blow out that number, everybody that was debating whether or not to jump in on the Alibaba, they're going to run this thing to 130. And then obviously we have a blue sky breakout. This thing could be 150 by, again, I look for October, obviously. That's why I'm sitting with the October 120s.
All right, I'm looking up, searching for news here on Lululemon, LULU. Just spiked up to 56.45, back down at 54.85. This has had the bad earnings report, the major consolidation, triple bottom. To me, I'm keeping an eye on 54 even. That was your highest level since the disastrous earning report. 54, 53.88. Now you're breaking up here to 56.35. Long as it holds 54, this thing may be good to the upside. You also want to check the news here on Lululemon, retailer getting a little bit of a bounce. But this is a really a tough one here because, man, you're gapping into a gap area. I mean, what are you going to do? You're going to go right back up to $62? I don't think so. But File, any thoughts here on Lululemon? Buyout news, private equity chatter from Spinner 213 and Johann Smith.
Oh, wow. I am a big fan of their product. This stock is a little bit too volatile even for me. Every other, every 2 months you hear takeovers or their business is slowing down or their business is increasing. Stock's been all over the map. If you've been to my neighborhood and you walk into Wegmans, the shopping center, 98% of the young mothers and I guess your older mothers also are wearing their products, and it's fantastic. But I don't know too much about the stock, but they must be selling a lot of product because everyone's wearing them at the Wegmans. So if that's any indication of whether or not you want to buy the stock or not, come to my neighborhood because everyone's wearing their stuff. So.
But what about you, Kenny? I don't think I saw you wearing any Lululemon yoga pants when I saw you out in New York.
Yeah, well, I had them on underneath. I had the Spanx. Is that still a thing? Spanx?
Oh, guys, I still wear jean shorts in the summer, so you're not talking to a fashionista here. All right.
Jorts.
Exactly. What a fun hour we've had here. We've had a special guest host, Kenny Glick. And Kenny, at the dinner table, I was telling my wife and my 2 daughters that you were going to be on the show today, and I described you as the funniest person that I know.
Wow.
And you just crack Dennis and I up when we're in New York. You always have a great perspective on the market. You're very consistent. I know you're looking for Dow 24,683, I think was your target. Before we let you go, is there any other issue that's on your radar today, long or short, that you'd like to bring up to our listeners?
Well, I'm seeing the snap about to test that 1750 for you guys that were looking to play a bounce on it. If it could hold 1750, that'd be something. But really, I'm looking like you were talking about pre-market and post-market areas. If it breaks the 1750, you got to be looking 1707. And if it breaks 1707, my God, you got to be looking 1650. But I do like, I still, I love my Alibaba. I like the fact that Triple D's pulling back a little bit here in the pre-market. But right now, as much as I'm bullish, I have put spreads on. These are called credit put spreads. I am buying diamonds and QQQ puts, but I'm selling plenty of those naked puts. I guess they're not naked because I'm sort of covered. But for instance, if I buy a 205 diamond put, I sell a ton of 200s and 195s to pay for the 205s. So really, if the market goes nowhere, I'm still net a profit. And if we go down slightly, that's even better. As long as we don't crash, which I don't anticipate, these positions are going to be pretty good. And for me, a bull, I am, doing these put spreads right now, and they've been working every month because I've been taking in premium. So the worst case scenario, obviously the worst case scenario is I open up, the market one day and it's down 20%. I might be put a few, couple thousand shares of Qs or diamonds that I don't want. But so far so good because we've just been grinding higher and the pullbacks keep getting bought. So that's kind of what I'm doing. And for my cybersecurity comments that were dangerous, I understand. It's again, that's just my conspiracy theories talking, but just still not a fan of the cybersecurity stocks.
Hey, everyone's entitled to opinion, and you've given us some great opinions today. Kenny, we're going to get you back on again soon here. Not sure I'm going to kick Dennis out for you, but great job today. A lot of fun, covered a lot of issues. So, Kenny, we'll let you get going and enjoy your day. Thank you very much. On tomorrow's show, we will have Michelle Schneider, Director of Trading Education and Research for Market Gauge. If you missed part of today's show, you can listen to the whole thing again in our podcast. Find us on iTunes, SoundCloud, and Stitcher by searching pre-market. Please always remember that all the information, material, and content from our show is for informational purposes only and not to be investing advice. That's our show for the day. Thanks for listening. We'll be back with you tomorrow morning.
Thank you.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need need thinkorswim. To experience everything thinkorswim has to offer, open a TD Ameritrade account today. thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.